Donald Trump shows no signs of stopping and continues to intimidate trade partners with new threats. He has now promised to increase tariffs by 200%, although for now only on alcohol products from the European Union. But let's not forget about the auto industry. He has also promised reciprocal tariffs for global US partners. These are due to take effect on April 2nd. Amid the chaos in the US economy, instability and the threat of a recession are taking center stage, with the stock market searching for a bottom and the dollar struggling to stay afloat. To understand how currencies might behave, it's important to frequently check the latest statistics. You are watching Traders Calendar for March 18th. With Trump's main tariffs against the European Union still in the works, Eurozone statistics are showing moderate optimism. For example, Germany's economic sentiment indicator is expected to rise sharply again in March, following February's 26-point reading that marked the largest jump since the beginning of 2023. And this optimism is likely to fuel by market hopes for a new political course in the country. As a result, the euro is expected to strengthen following this release. The Canadian dollar also looks poised for gains as inflation shows signs of picking up. In January, inflation rose to 1.9%, and February is expected to see a further increase reaching 2.5%. And this could put additional pressure on the US dollar and support the Canadian currency. However, prices remain close to the Bank of Canada's target level, meaning the possibility of further rate cuts cannot be ruled out. The United States is set to release housing market data on this day. The construction sector of the US economy continues to show signs of slowing down. While 1.473 million building permits were issued in January, February is expected to show a slight decline to around 1.471 million permits. If the forecasts are confirmed, this could weigh on the dollar. The report on housing starts is also expected to show a decline from previous figures. The downward trend began in January when new projects fell nearly 10%, reaching 1.37 million. Contributing factors include adverse weather conditions and rising cost of construction materials due to new import tariffs. In February's data confirms the forecast of 1.34 million. The greenback will likely come under further pressure. U.S. industrial production is also grappling with the headwinds, with the growth rate decreasing from 1% to 0.4%. The pace of expansion is continuously easing, with the US economy showing weak recovery momentum. February's reports are likely to confirm analyst predictions, further weakening the dollar's position against other currencies. If the US crude oil inventory report also indicates a drawdown, crude prices could see double opportunity for a boost. However, the last report revealed that after a 2-week decline, US oil inventories began to rise again, with a notable increase from a minus 4.5 million to plus 4.3 million barrels. Therefore, uncertainty continues to loom over the oil market, particularly given the ongoing instability in the global trade. Please note that the publication's times are set in the GMT +3, and the next video review of Traders Calendar will be very soon, on Tuesday, March 18. And now we continue to follow developments in the financial markets with us. Subscribe to our channel. And see you soon!